Bam. All right, welcome back everybody to webinar 9. In this specific webinar, as you all remember, I did say that I would mention something that I've begun to notice in some markets that I've coined or called the the triple M candle. So we're going to go over that a little bit today. We're going to go over some outlooks, of course, potentially look at some of the trades that you've taken or are looking at, just to give you my 2 cents on them. Similarly, anybody that wants to have any questions answered or has questions after working through a bunch of the content, please feel free to start dropping questions into the Google Meet chat or into the Zoom chat. As we work through things, we'll of course work through those. If you've had a question in webinar questions that has not been answered yet, or one of the people that didn't have something answered last week, please make sure to drop that here too, and that'll be fantastic. So as you all know, I was away last week. We did have a 2-hour webinar before that week, so I guess that kind of made up for it, so that was really nice. I hope everyone had a fantastic week this week, or last week specifically. I know I had only literally like 1 or 2 trades that I was able to send out or take. I think if you all remember, it was on AJ, and it was on my connecting flight while I was in the airport, so we got lucky on that. But we can take a look at it right now if I can go and find it, because I think I removed it. But it was somewhere in here. I was expecting higher prices from one of these areas. I do believe it was... Shit, I don't even remember. It definitely wasn't here. I think it was somewhere in here. There was a really good buying opportunity that I ended up taking. Let me see if I can find it though. Okay, so the Google Meet's going well. But yeah, if anyone has any questions or anything of that sort, please feel free to drop it. I've been using Google Meets for school, and now we're doing a webinar using it. Yeah, it won't be like this every week. Next week, we'll definitely have the upgraded Zoom. So we'll be able to all jump into the Zoom, because I like Zoom a lot more. I was the Bahamas hotels. It was beautiful. We had a lot of fun. I will be gone next week again. I think I'll be in Mexico, but I still might have the webinar. We'll see how that goes. We'll just see if time permits it. Become a vlogger? No, we don't do that. It was a big up candle on the 11th of May. Oh, thank you. Okay, let's see if we can find that. 11th. Oh yeah, so we caught the buy in here. Right, okay. So if anybody remembers, we'll just try to backtrack this trade. So if I get it a little bit wrong, my bad. But it was like a 5 or 15 second entry, so we'll take a look at that. So I was looking at this demand zone right here, and at the time, just for the sake of context and putting this together, I was still very bullish on this overall. As you can see, even from that point when we had it replayed, we were still printing just higher highs, higher lows, the good old thing where we were hitting demand zones on the way up, right? Tapping into demand zones on the way up, tapping into more demand zones. We've left behind this demand zone, so again, we're looking to tap into that. But similarly, we're just breaking higher. And if we zoom a little bit further out, these were all daily, by the way. So if you want to see the refined, that's just those daily demand zones. Pretty simple. If we zoom out very quickly, you'll notice that I'm just looking for it to basically make its attempt to run up into these areas, and these areas, like very long term. Otherwise, I don't want to see a correction, which might be slow, might be fast, we don't really know, but most likely a slower correction, which will give you some ample opportunities on the way down into the demand zones here to then continue this upwards movement. So I've just been looking at AJ, no specific reason. Anyone that's new here or beginners, I've looked at many different markets, week in, week out, like just different. There's no specific reason. This week I chose AJ because it's my name. So I decided to look at AJ for the fun of it, and I saw a great setup, and on the connecting flight, it was a perfect time to enter. So we were able to get that off, and I'm sure you guys saw it in the Discord as we went over it a little bit, which was right, if I can find it. Yeah, so here was the management of it, and the entry was right here. Off of that 4-hour zone, I believe. So right there is the 4-hour. Actually, we can go and locate that. Yeah, so it was just a 4-hour zone. Looks like it was just this wick right here. So that's really cool. But either way, expecting that bullishness. And also, we will look at how and why I chose some of these supply zones. I've started to use the fixed range a lot more. It actually helps a lot with confirming POIs or deciding POIs, or even showing you where liquidity in the market lies. So for instance, just looking at this right now, it's really easy to tell there's a ton of liquidity right here just by looking at this tiny little node here of volume. And we'll go over a little bit how we use fixed range and how I use it. I don't think that there's any tutorial on YouTube or in any mentorship about how to properly use the fixed range. I've literally just kind of come up with this by testing it a little bit and just using what I already know and the way I like to trade, and it's come to be a very, very nice tool for refinement. So we will probably actually add an entire section on the fixed range because it's actually it's surprisingly very helpful in showing you imbalances in the market, which supply and demand zones are going to be held, how you can refine them without actually going deeper into them, and can show you where liquidity in the market lies. So it's actually a very, very powerful tool if you understand how to use it properly. And maybe I'm using it fully wrong, but I've noticed that it works a specific way, and so far the concepts I've hit you guys with have definitely helped all the way through, right? How old are you, AJ? If you don't mind me asking, I'm 21. Been curious how to use it. Yeah, so we'll take a look at that. That's cool. Let me take a look at the Google Meetings one. You inspire me so much. Thank you, man. If you're going to Mexico, you'd be willing to meet with the members. Yeah, I may be able. Oh, you mean in person? Maybe, we'll see. Probably not. We're going to some all-inclusive resort, so we're going to be like inside. What time frame do you manage your trades on? All of them. It all depends on how you're entering, what your expectations are, and where you're looking to take them, right? So like, for instance, on this trade specifically, the one that was taken off of the, yeah, so there it is. If we can find that 4-hour area, was it this one right here? Yeah, so as you can see, I was just looking at this 4-hour wick, and if we get lower, right, if you just start playing around with it, you'll go ahead and find that that's a 30-minute, whoops, that's a 30-minute demand zone, unmitigated, of course, and then you could take the extra step of going to refine that to, of course, the wick, right? So this is already refinement in itself, just taking the wick, right? And there you go. That's where it perfectly went to. But again, not every zone is going to be hit to its perfect refinement. So that's why I sometimes use, or you'll start seeing me use, a larger demand zone and a refine zone. So that way, if the refine gets hit and then starts to reject, I know for a fact that it's most likely going to be a pretty big mitigation, right? Otherwise, if I come in and price begins to potentially give me some kind of outlook to the top side, I know that this could be either a false break in some cases, or a false Wyckoff schematic, or the beginning of a larger Wyckoff schematic, right? Because I have an area pinpointed, but that also means that I could still be part of a potential move here that might partial me at supply zones, or even at liquidity, or even make quite a large enough run before coming take it out. And what I mean by that is, if you just take a look at AJ, for example, right here, right, and we just zoom out, actually GJ might be a better one. I remember it happened to GJ, so we can go take a look at that. Yeah, so here we go. So I actually looked at this, so there was just this break of structure, very simple, and there was this demand zone right here, and I went ahead and refined that. And as you'll see, this right here, even though this was a great impulse and it started to break structure and there were great opportunities in here, I bet you this was a perfect Wyckoff, right? So you can already see it without me getting lower, but I'll get lower in a second. You probably have some kind of selling climaxes, some STs inside here, maybe an ST and B or an ST challenging that selling climax, the ST and B or the spring, right? And then beginning to break structure on a lower time frame. Potentially there's even more Wyckoff in here, and this wick right here would be the test. And you could have taken this higher to partials, and potentially even the supply zone inside of this wick as more partials, right? And this was all off of that same demand zone. But then as price returns to it, you aren't surprised by this move here, and you don't think that this is a break of structure to go lower, because you've understood that price still has areas of refined supply and demand zones inside of it that can be mitigated. So sometimes I don't recommend you taking a zone and fully refining it and just leaving it at that refined zone, because that means that you'll also miss a lot of trades. But I also don't recommend that you take an area, right, and just say, okay, it's unmitigated, and the second it mitigates and it moves away, it means that you're going to expect bullishness completely out of the market, right? Because it can easily continue a larger schematic and form a larger schematic before the continuation higher, which is exactly what happened here. And if you were caught out on this specifically, you would have missed the upside that came to meet even new highs, right? Is it still effective on the lower time frames? Bro, I only trade on the lower time frames, so yes, very much so. The concepts are entirely can be entirely fractaled down from the 6-month chart to the 1-second chart. As long as there is price that you can look at, the concepts apply. Okay. So let's go back to the AJ and just talk about that specific trade, because I did want to talk to you guys about it just to show you what happened over the week and why I wanted to get involved on it. So again, you can see that, I didn't have it refined at this point. I was on the plane, so I was doing it on my phone, so it was a little bit harder. But if we go back here to go to the 30-minute, yeah, so this is the big up move. Let's go and replay price to around here. so we can just see it. All right, there we go. So yeah, you have the zone, you have a refined if you want it to be refined. Otherwise, in this specific case, it didn't matter because both of them just came to tap in, right? I believe I was watching this on a 15-second chart, so we can go and jump down to that on there. Yep, there we go. Let me make sure that it was the 15-second. I don't want to be wrong about this. Yeah, so it was a 15-second chart. Nice. And you can see that I actually used the fixed range to enter on the 15-second chart because I didn't have time to refine or anything like that. I just wanted it to be simple. But as price came into this zone right here, you can see this low created right here. That's this low right here. And then began to break higher. This has already began to undergo, as you all understand, Wyckoff, right? We began to have stop in price here, then a huge rundown. That's fine. We don't know if Wyckoff's happening yet, as you all understand. And then we begin to create what appear to be little intermediary term wicks and liquidity. Liquidity gets ran, we create some more liquidity. Are we breaking structure yet? No. We come down again, breaking more liquidity, right? All these wicks are miniature term liquidity. How does that really work, even though it's a 15-second chart, right? I've spoken about this a little bit. You guys have to recognize that just because we're trading the 15-second and 5-second does not mean there's retail traders on the 15 or yeah, like on the 15-second going, all right, let me buy this trend line, right? That's not exactly what's happening. What you have to recognize about retail concepts in general, right? And a lot of you already understand this, is that they're very emotional based concepts. And if the market looks like it wants to go higher, whether or not there's a candle printing there or not, right? Like if the market just looks bullish, you want to be bullish on it and you're going to start buying. So at these specific zones right here, right? On a higher time frame, which is like maybe a 1 minute or a 5 minute, which is what retail might be watching, this movement right here, right, is going to look like what? It's going to look like a candle that is bullish that keeps doing what? Disappearing in and out of existence like this, right? So this is a bullish candle and it just keeps doing this over and over again. And when retail sees this, right, this is for them, this is bullish momentum for them and they just want to get into it like as fast as they can. They need to buy this, so they end up buying that candle because this in itself is just one candle, right? And that candle is going like that over and over again, and they're like, all right, let me buy that shit, let me buy that shit, I got to get in on it. They start buying into it, and then that is the liquidation of those same people, right? So that is literally them placing maybe stops here. That's right here is the next liquidation like this, and then it leaves behind and then starts to take off, right? Now, how the fixed range work. We will go over the fixed range. I'll make an entire section on it. Do not worry about that. I wanted to make sure that I understood it myself, but this one specifically, I want to talk about the triple M candle. Something that I noticed, something I have not tested extensively, something I've just noticed that can provide actually very nice RR, but can also get you in on the wrong side of the market and take multiple losses. One section 4 dropping, 2 or 3 weeks probably. So again, this Wyckoff was occurring, and then as we had this break right here, this impulse was enough for me. Now, for some of you, that might not be enough of an impulse, right? Some of you might wait for the double mentfx block, which is perfectly fine. If you follow the mentfx blocks, right? What's the last down move before this move was made here? It's right here, right? So you take that down and you wait for its validation. When does it get validated, right? So this is the same rule we've talked about in the ment block in multiple webinars, as well as some of the sections. So as the second is validated, we have one ment block. Now the second it starts to mitigate it, we don't know if the next ment block is forming, right? So if this price right here, this candle specifically, came only to here, I would still be unsure about this being a ment block. But the second this price came to really tap into it, right? Tapping into not only this entire area and more than 50% of it, but also into the demand zones that were unmitigated here, as well as the liquidity left behind in, not liquidity, sorry, well, both actually. Liquidity and the imbalance left in here, tapped into it, right? That is now a second ment block that's confirmed. And from there, you already have the opportunity or the option of either taking the buy stop on this, right? And just, you know, dropping your stop loss right below it and taking it to the top side, or as it gets validated, which happens right here, and that ment block is validated, you have the option to buy the retrace of the open, or to buy, you know, the retrace of the 50%. And for those of you that want to know what the 50% settings are, just really easy to see. You can see how perfectly that happened right there. Perfect little entry, filling in also that imbalance, filling in and also taking out the last bit of liquidity that rested below all this area here. And if you keep following this and notice what's actually going on here, you actually have a secondary Wyckoff that happens right into that, right? You again start forming those same lows, liquidations of them. Where's the last move down before this liquidation happened? Right here, right? When does it get validated? Right here. When does it trade into it? Right here. where's the move that made this move happen? Right here. Where's your entry? Right off the validation of the next mentfx block. So again, you have multiple ways to enter this. I didn't even enter this way. I entered like this. So I actually just waited for this first impulse right here, and I just measured the fixed range of this impulse right here. And after doing that, I believe that's the one I took, right? So that's, oh no, I took this entire impulse right here. Okay, so let's look at that impulse right there. That high. So it's actually to this high that I looked at the impulse of. I guess it was because I was looking at it a little bit late, and it was on my phone, so it was a little hard. So the second I saw this, I just used the larger areas. So this one right here and this one right here as my means to enter, right? And you can see that right here. Large area, buy. Literally didn't even look inside price. I just didn't have time to. I was on the plane. I didn't really care. So I was already pretty much valid for this. To be perfectly honest, I had this position too, but it was honestly right here. So it barely didn't tap, so this one never happened. So that's fine. And then this began to run. And then as this began to run, again, you guys understand partials. I believe I took some partials here, just because it was a fine time to take partials, about 5.6 RR, so about 2.5, 2.6 RR confirmed there. And then this rallied up, and I believe I just moved the stop with it. So yeah, we broke even here a long time ago. We broke even here. I partialed. Yeah, took partials at those equal highs. There you go. Aiming for completion around 1 to 50. As price began to break higher, so now I started to trail it a little bit on the 5 minute, right? Because as price breaks, you can use the higher time frames to actually see the intermediary swings. And as it began to break like so, you can see we just had a trail to just inside of here, just above break even. With the little mentfx merch right there for the then if we go in here and look at this, you can see the stop loss on 5 minute was moved to this low right here before this break. So that was actually shit, which one was that? I think it was this break right here. Let's keep looking at the stop losses. So the first low was made, I don't even know how I managed this, to be honest. I was just on the plane and it looked like something else. Oh, so I think this area is this area. Okay. So actually after this broke, I think I was stopped right here actually. So this is where I might have been stopped. That looks like the area I got and stopped at after this move. Yeah, so we'll just assume it's this one. And that was at about 1 to 12. So that's pretty nice. And of course there were partials along the way, multiple. So it wasn't actually a 12RR, but that's how we managed that. How long till the fixed range section? So I've been testing it a lot. I've been putting a lot of work into understanding the fixed range myself. And I want to be able to deliver it in a manner that, again, will make a lot of sense to you educationally. Because holy shit, there's so many ways to use the volume profile. They have the session ways, the fixed range. I like the fixed range the most because it actually tells you things. But for those of you that want to actually go and just learn it before I even say anything about it, go and measure the impulses of any market, right, from a low to a high to a low. This is what I've noticed. And look at what happens at some of the higher profile areas and the lower profile areas. And you'll notice some very, very interesting stuff. And again, when I'll be working on it, and when I'm happy to drop it for you guys, I'll definitely make sure to drop an entire section on that. How many pips was that trade? So the overall trade with that low was shit, I don't know how to record pips in AJ. So this is what, 30 pips? I think it's about 30 pips with a risk of about 3 pips, 2.8 pips, 2.5, something like that. How many confirmations should you be waiting for when going for the trade? So this is something that is entirely up to you, right? So you saw how I just went down there into that entry criteria and went over about 5 different entry criteria you could have used, right? You could have used 1 mentfx block and taken it up. You could have used 2 mentfx blocks and taken that up. You could have used the overall schematic and took the buy stop of the schematic. You could have used the next schematic that came into it and created a ment block. You could have used the second ment block that was made by that schematic, right? So there's already like 5 or 6 entries there. You could have done what I did, which was take the impulse and look at the volume profile. That's a 6th or 7th entry. There's also, if you took a fib, if you wanted to use fibs, and this is the only time I'll condone fibs, if you create a way to mathematically enter with the fib. So what I mean is you do your analysis, you have your impulse, and then you're like, this is the impulse I want to trade, and you fib it. You can take like the 60, the 70, the 80, whatever it is, or even the 50, right? That's an 8th way of entering. So there's a number of ways that you can enter. In EU, what lot size do you use in your FTMO entries? That's entirely up to the the stop loss size. So I mean, oftentimes are 0.2 to 0.5%. So if you're risking about I said about 0.2%, it's not 0.01, it's 0.002, right? 200, something more than that, I think. I think like this is more normal, yeah, 500. So, and then you have like, say, this stop loss of 2.5 pips. Then this trade itself would be about 20 lots, right? But yeah, it fully depends on the trade. There's some trades that are taking at literally 100 lots. Some are taken at 30 lots. Some are 50 lots. Some are even 5 lots, right? It depends. You have to understand risk from a standpoint of how many pips you're risking, okay? So let's talk about some of this. Oh, let me check out the Google really quickly. Okay, everybody here is good. Inspired me so much. Thanks, ma'am. 21, super inspiring. Appreciate that. What would you call over-refining POIs? Okay, so over-refining POIs is just taking a POI and really just trying to boil it all the way down to its last low. Literally, when you do something like that, so if you look at this, you know, you could go and over-refine this to literally this last impulse right here. And if you did, you're done. And you could refine that to 50%, right? When you do this, you're technically refining this to an equal low, right? You're trying to you're trying to catch like a support and resistance almost. Over-refining is just taking it to just an extreme point that has, of course, it has the likelihood of hitting it and mitigating, but the likelihood is so small that, you know, 1 in 100 trades are probably going to miss, right? That's over-refining something, pretty much. Okay, I don't know if that kind of answers your question, but hopefully that helped. Hi, Anton, let's say we have a... Here, let me move this over a little bit so I can see it better. Oh, wait. Put this on this side. There we go. Fantastic. And yeah, we will talk about the Triple M soon. It's very simple, and you will all have to test it. Please do not go into the market blindly trading the Triple M and pretend like I lost you money, because these are all concepts. This is all educational, and your job is to take the concepts provided to you and create a system from it. And again, you have many things to work from if you don't know where to start, because as you all know, we have all these videos, the live trading, the back tests, and also, if any of you don't know, other course materials has some beautiful step-by-step rundowns that some people and profitable traders here use themselves to trade in the market. Depends on trade. Got it. My mistake was just entering without confirmation, even if it had an S&D or a mentfx block. Thanks for answering. Of course, ma'am. I noticed that you identified daily zones that are in alignment of the higher time frame bias. However, when you are looking to get involved in counter trades, do you look for daily zones or hourly? Well, no. If I'm looking to get involved in counter, right? Like if there's a daily push like this, right? Just because there's a daily push and I'm using all these to see that there's a daily push and I'm expecting this to happen, when this begins to shift, or even before it even begins to shift and leaves behind a worthwhile zone that I consider a supply zone that has imbalance or anything of that nature, then I'm happy to already begin to look here for confirmations to go short into those zones, right? And that's not based off of any specific higher time frame zone. It could be based off of something as small as a 15-minute break of structure, or even just a 15-minute supply zone left behind, right? The confirmation is what allows me to get in. And part of this is honestly what you see me do in the backtesting video in the webinar, right? In that backtesting video, if you remember, we were on Euro USD looking at the monthly, literally the monthly in this area. And if you all remember, all we did to get literally like what, there was like 3 trades we took inside of the zone alone was all based on one break of structure. Right, there was this break of structure, and that break of structure came from a number of areas, such as this, you know, the imbalances, the last down before the up moves, and more inside here. Now, despite that, despite there was only, you know, 2 zones, we were able to orchestrate how many trades inside of here, like 3 or 4. Why? Because as price began to break down and then broke higher, notice how this move here didn't break any structure. However, it left behind at the time of, right, if we just go like this, when this move here happened and broke higher, it didn't break structure, but, and it did on a lower time frame, no shit, but on this specific time frame, it didn't. But what did it leave behind? It left behind an impulsive move that left behind a ton of imbalance and what is considered a demand zone. So if price is to trade into here and you're expecting it to go bullish and you're expecting it to fill in certain areas up here, why wouldn't you expect this area to be a fine area for you to look for trades from, right? So this is what I kind of wanted to actually touch on in section 4. And of course, the fixed range will be part of that. The fixed range is not going to have its own section. The entirety of section 4 is going to be focusing on the fact that, yes, structure is vital and very, very good to use to ascertain yourself in the market, to create a bias, but structure is not all there is, because structurally there's this break and that's it, right? But inside of that, there's also little structural breaks inside here, which is why you can take this, but it's more so the idea of where's price, what does it want to fill, how does it want to fill it, and how can we be part of those fills of price, right? So even though we're just in this, technically this small range, I mean this large range, but and there's nothing else to do if you don't wait for these buys. If you understand that price, as it takes off from here, wants to come and fill the imbalance here, to go and fill the imbalance here, then that will change the way you see the market and the way you look for trades, right? So you look for buys here, and then where can you look for those buys to? Well, you already know that up here is a supply zone, but also is liquidity. And that liquidity lies just below this imbalance. So you can look for, on lower time frames already, sells in this area as a supply zone into smaller buys in here to then take into those imbalances here. And again, notice how I'm doing that all without any structure whatsoever, right? There's no structure telling me to buy here, potentially sell here, into the buys all the way here to sell, right? Because theoretically, why would you ever sell here if the structure is, right, bullish? Well, because you understand that you're not just structure trading, you're also zone trading. And of course, as you really understand the fractal nature of this market, you know that the market is constantly in a bullish and bear sentiment, in the fact that even when it gets here and it's still bullish, it's also very, very bearish on, for instance, a weekly or even a daily, right? So on and so forth. And it'll have zones of unmitigated orders. And those mitigations is what we look to trade. And sometimes if you use structure, you can orchestrate those mitigated zones of trades to very, very high targeted areas to get those higher RRs, right? Which is why not all of our trades, literally the most of our trades, never go to hit extremely insane RRs. And by extreme, I mean like 1 to 300, 1 to 500, because the odds of the move here coming to grab this is going to be a lot lower, right? And if you all remember, this is the monthly chart. This is actually where it finally turns around and begins to take off lower, right? And if you were just a structure trader, this right here, every buy in here is a loss, because you'd be aiming for this, right? Okay, so again, if I was looking at this already without any structural, just using inefficiency and liquidity, you know, liquidity's here, inefficiency here, we know that we just came tap into here, we want to buy into it, but on a lower time frame, we know there's a supply zone here. Let's look to sell here into a buy here into the buys into here to clear liquidity, right? Let's see what happens. I don't know how this exactly goes. So you get those buys up, right? Already, look at this. Those are supply zones showing you mitigation. On lower time frames, this right here is millions of dollars or hundreds of thousands or tens of thousands with an FTMO count because of the type of mitigations you have there, especially if you're confirming them using what we teach here, right? So again, that's already huge, right? And if this tapped into this demand zone right here, already there's no structure here telling you that this demand zone should be the one that holds. But because of the bullish sentiment you have and the fact you want to see price take out this liquidity and fill this inefficiency is what allows you to believe that this zone can be a demand zone that you can use to take yourself to the higher areas in price, right? So this is what I want to deal with in section 4 specifically. So we come reach up. What are we mitigating right now? Some kind of supply zone in here, right? Just like we said, again, this is a mitigation. And where's this mitigation going to come to? Potentially right here, right? And again, is there any point to buy this now? Well, technically yes, because you can see there's an intermediary structure being formed now, right? With this break. So now you have the confirmation of double structure to take these buys. But if this didn't even exist, this on its own is already a nice zone to use as a demand zone to meet the bias that you have for price to reach at least up into the liquidity here and the inefficiencies here, right? So let's see if it does that, right? I mean, I'm not sure if it does tap into it, does it? So it comes towards it, doesn't really tap into it before taking that high. Let's see. Nope. So takes the high. Okay, so no trade there and reaches up into that zone. And already now you can be looking for sells on lower time frames, because on lower time frames there's going to be this happening everywhere, right? And these are all potential trades. So so hopefully that made some sense. I noticed that you identify daily zones. I forgot why I was talking about this. Alignment of the higher time frame bias. However, when you're looking to get involved, do you look for daily zones or hourly? No. Okay, so exactly. So there's literally times where I'll be so into a bias that on a lower time frame, I will use a 5-minute POI with a 15 or a 5-second confirmation to get in, right? And it's not like that 5-minute POI is the POI that's going to hold the daily or the weekly bias. That's not how I'm thinking, right? But what I'm thinking is, based on what I assume about this market and where it wants to head, this is the potential area where I can expect a potential move to happen from. And that can, and again, constantly when I'm thinking in this market, I'm not just thinking, all right, I hope, right? I'm thinking this can happen, right? This can happen, right? And if that happens first, then there's a high likelihood that this could happen. And if that happens, then there's a high likelihood that we tap into here and this could happen, right? There's about like 500 different biases that I have at a given point, with one that is overruling everything. But I'm not confused, or price doesn't surprise me when it does something very crazy. I go, oh, it wanted to rebalance to that area first and grab that before it did that. Okay, let's be involved like this, right? You have to be flexible, and you have to have the ability to be flexible with your bias. This is a thing that's prevalent in whether it's fundamental trading, retail trading, or smart money trading. If you can't be flexible with a support turn resistance, or with a supply and demand zone completely being invalidated and a new one like starting to hold, or a new structure being put into place completely, then you need to work on that, right? It doesn't matter which way you're trading. You need to have a way to be flexible with a bias, which again comes back to don't get attached to your bias, but try to stick to it until it's invalidated, right? With the assumption and the underlying notion that it can be changed by a multitude of factors. Okay, so let me take a look at the Google Meetings one just to make sure I didn't miss anything here. What'd you call over refining? We got that. That's a pretty long one. We'll save that one for a second. Let's look at this here. And if you use other zones in the daily, how do you typically determine stronger zones than others? Apologies is something that you were planning to share in the session, and I'm jumping the gun. I hope the question makes sense. So no, I wasn't going to touch this on the session. I touch on this a lot in the sections, right? The ones that I like to be the most like prevalent are the ones that are unmitigated. On top of that, you can add in your own things, and I sometimes do this. You can ask yourself, did this zone grab liquidity? In some cases, when a zone has grabbed liquidity, I don't use this myself, but these are questions you can ask yourself. Then you can potentially use it. Another one is if you wanted to start to fuck with the fixed range a little bit. If you did start to play around with the fixed range a little bit, you could ask yourself, okay, is this zone a zone that actually has volume that's worthwhile defending for anybody that's actually, any banks that are trying to get involved here? And if you do this, you'll notice that yes, this zone is actually the last zone that they would want to try to defend if they are to take the market higher. And that's why they took the market higher, right? So you can throw on a number of other things, and we'll talk about the fixed range in the future. Don't worry about that. But for myself, I just like to see unmitigated, right? This was already this was enough for me to use this demand zone, right? And all is good, right? And again, notice how technically, actually no, this demand zone did break this structure right here. So there was a bullish prerogative, but theoretically, you would suppose that after this break, that came from here, right? And then the market was made bearish again, right? Which is true. All of those things are true, but also on a higher scale, this right here was a bullish prerogative in price. And even though overall we might be bearish, right, with this break, I think this is a break, yeah, with this break right here, you know, there's still so much bullishness in here that can happen from this bullish structure that I just got put in place that can then finally meet us with long-term bearishness, or to start running the long-term bullishness, right? And both are perfectly fine, because we don't need to assume if this is going to get ran or this is going to get ran. All we need to assume is how we're moving towards the zones in here and the zones in here, right? And then we look to trade those on the way. How about the triple W? It's the triple M candle, but yes, we'll go over in a sec. Can you do gold forecast for next week? I haven't looked at gold in a while, but sure, I can probably look at gold. The backtesting video was gold. Thank you so much. As you scale down, do you ask yourself where the biggest pullback was within zones left behind to understand how you're going to get involved? As you scale down, do you ask yourself where the biggest pullback was? I mean, yes and no. Sorry, I don't really get this, right? Like, I'll use mentfx blocks sometimes to gauge where I am in an overall trend. And I'll look at refined zones inside there, such as just normal supply and demand, to look at where price might want to come. If that's what you mean, hopefully that answered it. Otherwise, can you try rewriting that question? Right, so now on the Google Meetings, let's look at this. Hi Anton, let's say we have a 4-hour supply zone, POI, and price apps into it, making a Wyckoff on the 15-minute. Okay, so you have, I'm just gonna draw this out for my, okay, you have a supply zone, Wyckoff comes into it. Schematic is validated with the sign of weakness, and let's say you're looking to buy on the test of the UTAD. You mean sell, okay, so you're looking to sell on the UTAD, which is the last MB. My question is, when the price reaches the MB from which you want to sell, do you only look for Wyckoff in the unmitigated zones, or you look at Wyckoff to occur anywhere? Again, objectivity, subjectivity. It's up to you how you want to look at this. If I have a prerogative to go bearish, and this exact situation right here happens, then I'll use probably the overall area, right? Otherwise, if I'm looking to confirm or take many trades on like a 5-second or 15-second, I will find multiple 5-minute or 1-minute inside of that 15-minute MB that are unmitigated to look for those potential mitigations, right? But yes, both ways is perfectly valid. Is it better to use the fixed ranged or the VPSV fixed range? I completely stand by the fixed range. I don't think any other way of using the tool is good. But again, go test it, right? I only learned about the fixed range literally about, I mean, I knew about it and I use it now and then, but I only started to really test it about a month or two ago, and I started to see some really interesting stuff with it, and now I'm at a place where I'm happy to use it in my own analysis, because it confirms and just gives it gives me a better anticipation of what I can expect from price, right? Nothing has changed from the way I look to get involved, from the way I look to confirm, from the mentfx blocks. None of that has changed. The only thing that's changed is how likely the probability of how likely a zone is going to hold based on it, or where price might go to run liquidity, right? That's what it helps me in some cases look at. You guys couldn't away teach yourselves the fixed range. When I saw in a previous video, I just kept applying it to swings and found that you could just look for minor consolidations in the swing. Exactly. So this is actually very close to what I do, but you guys can, like I said earlier, completely teach yourself something very crazy, right? Take an impulse, take anything in price, take a setup that you might have taken, throw on a fixed range on it. See if you notice any similarities between that every single time you do it. If you don't, fantastic. You didn't learn anything new. If you do, test it, right? And all of a sudden you might have something that might be an even better confirmation for your entire system. And don't worry, I will go over how I look at it myself with all of you. But like I said, I want that all to be part of the next section, which will also be intertwined with the idea of zone trading and mitigation-based trading instead of just what we believe to be structure, right? So, I mean, all of you have seen that I still use structure, very much so, right? I love structure. But also, just because a structure is in a given direction does not mean I will not look for potential trades in the opposite way, right? Counter trend, or even supply and demand zones inside of that overall range, right? Because I understand how some zones can be moved to, how those zones will be mitigated, and then what liquidity could be met before that bullish structure on the daily or whatever wants to continue for real and then break new highs, right? Just like that GJ trade or that GJ chart we looked at a second ago. You guys all noticed how we had that first mitigation, came up, broke, and then came right back in before then taking off, right? You could be a part of many of those moves inside, right? Because those were daily charts as well, daily candles. So there was not only, you know, that bullishness remained for God knows how long, right? We can go take a quick look, but what is this? Oh, we're trading channels out here. Nice. So if we go into the daily right here, right? And if you take a look at this bullish leg right here from the time it made a new high, technically right here, this was a break, right? Held bearishness or a ton of other opportunities inside it until, right, it finally started to have the bullish pullback again, which was 23 days. So you would have been on your ass for a month if you wanted to find the actual buy. And if you just waited for that buy for a month, you might have even taken a buy in here that would have taken you into a loss, right? That you might have desensitized you or made you think that it's finally bearish, right? So yes, structure is important, but also understanding that, you know, you have multiple areas that need to be filled as price moves is very important too. In some cases, like just looking at this, if I looked at this at the time of, I would be like, okay, price wants to fill this probably, and price wants to fill this. Whichever gets filled first is where I look for sells or buys. This comes to get filled first. Okay, let's look for some buys. Oh, this buy doesn't work out, but look, it comes to fill more and comes to get taps into my refined demand zone. So now we might see bullishness. We see bullishness. Where do I think it's heading? At least up here. When it gets here, what do I expect? It's probably going to break through after, but given there's an imbalance and there's orders that need to be mitigated, there's probably going to be some mitigation before that happens. Is there? Yes. Is there sells in there? Probably. Should we go take a look? Yeah, let's fucking do it. 15 minutes. All right, sure. So, I mean, you guys can already see it. You get down inside here, we wyke off, we break down, we have mentfx blocks in here, another mentfx block forms. This is all a mentfx block sell from this sell right here, right? That's a huge sell off just from that area. And if you had just been bullish, you missed this entire thing. And inside of there alone, just by looking at some of the unmitigated supply zones that form on the way down, the amount of other opportunities you have to confirm more entries short, and then oh no, holds for a little bit and then finally fails. And even in here, I bet there's still a decent enough trade that might take you into some RRs of profit, right? So if we look at this, let me this really quick. So in this case, it's a little bit ugly. I don't really like this too much just because of this right here, right? There's no mentfx block to use here. Instead, it breaks down, and then maybe you look to get involved off of some confirmation in here. Then this gets invalidated, so maybe you don't get anything. But my point is, this is the last one that barely held, and still you had proper mitigations that might have been able to give you some bearish pressure that you could have taken, right? If you did take a sell up here, this right here, as you all know, even with spread, this right here is some sort of profit or partial or break even, right? Every one of you that have traded the lower time frames already know that this move right here would have already given you some kind of profit, right? So hopefully that made some sense concerning that question. I got kind of off track on that, but do you have a widescreen monitor? Yes, I do. Why is it hard to see? All right, let me look at the Google Meet. Make sure everything's good in there. Wait, where'd it go? Google Meet disappeared. Oh, there we go. All right, turn y'all mics off. Yeah, mic off. What do you mean by high and low profile? Did I say that? Was I talking about the volume profile? Great answer, thank you. Oh, I appreciate that. Is there a video you would recommend to learn how to backtest in MT5? I only got to know about backtesting as a concept lately, but don't know how to use it. So either a replay tool on TradingView or go look up Soft Forex Simulator. I'm sure we've spoken about this in the past in some of the sections. I'm not sure where. Maybe some of you can let me know, or let him know. Don't really know. All right, so you told him TradingView is good. Yeah, but go look up Soft Forex. You might be able to make a demo account with an MT4 account and then go and test like that. But I suggest testing in TradingView because MetaTrader does not allow you to do things like this, right? And view price like that. MetaTrader will sometimes show you price like this. And I mean, you can go and try to analyze that and trade it, but it's so hard to look at price like that, right? If you made me look at price like this, I mean, like, what am I going to do, right? How do you get a good trading psychology? You build confidence by testing and refining your own ways of getting involved, and you understand why you're doing what you're doing, and you stick to them, and then you have a good trading psychology as a result of that, pretty much. Okay, let me work through some more of these Google Meet ones, because we're almost at the bottom of these, and then we'll go over the triple M for you guys. The concept I've been just looking at and kind of noticing that you guys can all go test now. We find liquidity sometimes above and below. How do we know which is relevant to avoid just saying, hey, that's where stops are? Well, for me, there's always stops above and below every single high and every single low. The way that I ascertain which ones are the relevant ones that want to be cleared or anything of that nature are, again, the same questions we asked before. What's your bias? Where are the mentfx blocks printing? How is the higher time frame moving, right? Is there impulse in the market? Is it taking weak hands into strong hands on the accumulation or distribution side? Is it mitigating off demand zones, supply zones? What's holding? How's it holding? And where can you expect to go next? That's the questions I'm constantly thinking about, constantly asking myself as I look at the market. S&D zones that get liquidated but still cause a BOS. Is it still safe to trade from that area? They get liquidated but still, well, I don't use any S&D zone that does not hold. Part of the way I teach S&D and part of the reason we understand supply and demand zones is because we understand that when they hold, orders in those areas are being held. If that's taken out, that's not the reason for it holding. So I would not trade it. No. At that point, it kind of becomes support resistance, which, I mean, if you find that works for you, then that's fantastic. For me, I like price to show me that it's moving in tandem with the orders in those areas. So I will not use a liquidated S&D zone. Where can I see the backtesting video? Under the live trading section right here. Be able to see it right there. Should be good. Webinar questions. Oh, somebody asked a question here. Let me make sure. Oh, it says max of 100. Yeah. So again, we'll definitely make sure that next week this is not the case. I will have it all upgraded. So I'm sorry for having to use 2 systems today, but it's gonna be all right. Do you care about inside bars? What's that? I'm not sure what that is. Inside bars. Yeah, let me know what that is. I'll be just write inside bars equals, because I don't know what that is myself. Have you already talked about this triple M candle? Not yet, not yet. We will in a second. In the live trading, yes it is. That's exactly what it is. All right, we're at the last one. So is it possible to only look at structure and use supply and demand and mentfx block to be successful? I struggle a bit with Wyckoff. Yes, entirely, it is. You should rewatch or at least watch every single webinar we've had so far. I think we've talked about this question quite a bit. Wyckoff is not necessary, and if you've actually seen section 3, you'll know completely that it's not necessary at all. It's nothing more than a description and an application of the things that you already understand, right? But yes, you can create an entire system out of mentfx blocks yourself, and just as a mini as something to push you, if you go into other course materials and look through some of the PDFs in here of people that have posted case studies as well as trading plans, some trading plans are completely ingrained in mentfx blocks and only mentfx blocks, and can work very, very well. So make sure you check some of those out, read them over, test them. Okay, let's go up here again. Just work through the last few here, and then we'll talk. Actually, so we'll save these for a second. Let's talk a little bit about the triple M for those of you that want to get out of here. Very simply, a lot of you know and have experienced the case where there's also this great AJ. Yeah. Okay. So a lot of you know and have experienced the case where an accumulation occurs, right? Or let's just do accumulations. An accumulation occurs, right? Potentially breaks. Maybe you get involved on the R, doesn't really come back, kind of does something like this, and then really begins like a very large markup, right? And then just runs. What I've noticed is in this markup, if you do miss any opportunities here, or even the Wyckoff occurs and the accumulation occurs and then the market begins to mark up, what I noticed is you can still get actually a pretty nice RR, pretty nice entries off of mini grabs of liquidity, so tiny wicks that grab other wicks in this markup. And what I mean by that is it has to look specifically like this. Okay, so I have to just go find random examples right now, but I'm gonna do my best to explain this in the best. And the reason I call it triple M is just market maker meant candle. It doesn't really mean anything. You can call it whatever you want. You can call it a markup candle. I don't really care. So let's go find a time where there was an accumulation and price kind of just took off and really didn't give you an opportunity to get involved, and then talk about how you could have gotten involved with this specific strategy. Okay, so I need a really good example of this, so I'm gonna look for a great example just to share it for the first time. Okay, right here. So if you look at this, let's say you at this specific point, and I'm not saying you did, but let's say you did have a bearish bias in the market and you have some kind of distribution occur inside of here, right? Break down, maybe even test it, and you miss it up here, or you look inside of here for a confirmation and you get a confirmation, right, of sorts, but it never touches and starts to run deeper. Now, as it starts to run deeper, notice how price is being delivered, right? Just follow the highs, and this will apply to any time frame. Again, I've looked at it on some time frames. Again, please test this. Do not just sell into these. But let's say you're bearish, you see the distribution, and price begins to mark down. Follow the highs. High, holding, good. High, holding, high, holding, high, holding, holding, boom. This is what I call the markdown candle, markup candle, the triple M, whatever you want to call it. That's the candle. The second that candle closes and is inside the range, but the wick has taken it out, for me, that is its own mini fractal distribution, or a stop hunt, whatever you want to call it. So what I've noticed is if you literally sell into the markdown, so you do it on the close, so the close is here in this case, with a stop just above the high, you can find many ways to go and then trail this I haven't tested all that too, but I've noticed that a lot of these in real markdowns hold very well. And sometimes they'll give you absolutely insane RRs, other times not so insane. And we'll go take a look at some more if I can find any. We'll go look at it on like even a higher time frame if anything. So like right here, for instance, this would be an example of a loss and then a win. If this actually, is it the same or is it, I think it's a little bit under it, but let me see. Okay, so it's the same. Perfect. So again, let's say in here you have some kind of markup. I'm not sure if you do, but let's say you start to decide that the market is heading bullish, right? Watch the lows again. Holding, finally takes it out. That's a stop. It closes. The second it closes, you have a buy to the top side. Stop loss at the low, just below it or whatever, because you know it has to be just below it. And then again, you find your own way you want to trail that. But this is a way that I've noticed you can get involved on markups. Again, follow it here. Notice what happens. The markup's happening higher, higher, higher. Get stopped hunted on this one, right? So this is already